Hey, this is David Miller with the Miller Group of Keller Williams Realty. I'm here to help you get real estate smart, and this is the Thanksgiving edition. All right, the real estate stats just came out today, and I'm here to interpret that data for you. Let's look at the inventory first. So what's going on with inventory? Well, inventory is at 11,357 properties, which is down 2% versus last month. Now listen, inventory's been going up for the past 9 months straight. This is the first month that has gone down. So why has it gone down? Well, this is the time of year seasonality where people like to take their houses off the market because they don't want to sell their house during Thanksgiving and during the holidays. So that will explain that. Now compared to last year, there's 45% more homes on the market now than there was the same time last year, which means if you're a buyer, there's tons of homes to look at. So what's feeding inventory? Well, you may ask, it's new listings. New listings are actually down 8% versus September. Once again, this is seasonality, we expect that. But if we compare it to last year at exactly the same time, the same time of year, and the same seasonality, we're also down 6%. So 6% less people this year were putting their houses on the market compared to last year. So what's taken away from the inventory? Well, what's taken away from the inventory are closings. So how do they compare? Well, compared to September, closings were down about 7%. Now that is a little bit of a surprise, but the bigger surprise, if you compare it to last year, they're 14% lower. So why is that a surprise? 30 days ago, the interest rates were really low. Actually, for August, the average rate was 5.9%. The rates did go up, but I think the main culprit is going to be the elections here. A lot of people were concerned about that, and I'll tell you, whenever there's uncertainty in the market, a lot of people like to pull back on those big purchases like houses and cars, and I'm sure we're going to see that in the car industry as well. So how is that affecting the market? Well, one of the biggest indicators we always look at is how many months of supply that we have. Remember, I always say below 6 months is a seller's market, above 6 months is a buyer's market. So what market are we in? Well, we're in a market of equilibrium because we're sitting at around 5.5 months worth of inventory. So once again, if you're a buyer, there's a ton of homes to look at. If you're a seller, that is quickly eroding your leverage that you had during the COVID days, because rather than your house being the only house on the market, there's probably multiple houses on the market. One of the other things I like to look at is the days on market. So this is defined as when you put it on the multiple listing service and how long does it take for it to go under contract. This does not count the closing period. So the average days on market we're seeing right now is 60 days in Metro Orlando. That is continuing to go up, and it's been creeping up slowly, nothing crazy, because it's only about 3% higher than it was in September. However, if you compare it to the same time last year, it's 36% up. So that means it's taking longer to sell. And what I'm also seeing out there is a lot of listings that are hitting the market when they're not selling are getting price reductions. So the name of the game, if you're a seller, is price your house right from the very beginning and listen to the market. Because if you're listening to the market, you're going to keep your house fresh and it's going to go under contract for you. So how is this affecting pricing, you may ask? Pumpkin pie. Well, pricing is actually up. Remember the previous 2 months it was going down, and I said if it happens for 3 months it's a trend. Well, we just averted that where pricing actually went up 2.4% versus September. If we compare it to last year, it's up about 3.2%. So pricing is still going up. Remember, the average over time is 4% per year. We're a little bit below that, and we've been bouncing all year based on the interest rates here. So what are my thoughts for the last 2 months of the year? Well, first of all, thank God we're done with the election. No more of those commercials. Typically what happens with a small base of clients is that when there's uncertainty in the market, which is caused by an election, they like to hold back on any big purchases like a house or on automobiles. So I really feel that had something to do with the declines that we're seeing in the sales that are out there. The other thing we're going to do is we're going to keep our eye on the inventory. We're going to keep on watching that because this time of year, the inventory does typically go down because there's a lot of people that take their houses off the market because they don't want to be selling their house during Christmas or the holidays. So we're just gonna have to see if we really fall into a buyer's market. Time will tell. If you like my last hat here, and you're one of our past clients, you know that every year for the past 12 years, we hand deliver a huge pumpkin pie for your Thanksgiving feast. So if you are one of our past clients, you're getting calls from us, you're getting mail from us, make sure you RSVP yours for this coming year. For everybody else, I hope you guys have a wonderful, safe, happy Thanksgiving with your family. Eat lots of food, drink lots of drink, and watch lots of football and be merry and enjoy your time with the family. And thank you for allowing me to help you be real estate smart.